Hey folks, Dan Ferrier here with your market update. So we're going to talk today a little bit about the Inflation Reduction Act because based on the headlines that you're going to see here in a second is what the Inflation Reduction Act means to homeowners. Big takeaways that help their budget. So let's watch this video and then I'm going to critique it a little bit. And yeah, there's some sarcasm in my voice and you're going to find out why. But check out this video, then I'll be right back to explain to you guys how this is huge benefits for first-time homebuyers.
And as we've reported, President Biden has now signed the Inflation Reduction Act into law. It includes hundreds of billions of dollars in funding to combat the climate crisis and to lower health care costs. But here's a look at the landmark legislation by the numbers. $369 billion. That is the total amount of money this will direct to renewable energy projects and to the lowering of greenhouse emissions. It includes $80 billion in rebates, including as much as $14,000 for individual consumers who can claim money back for installing energy-efficient appliances in their homes. Homeowners can also claim 30% tax credits for installing solar panels. And for those who are looking to purchase electric vehicles, there are tax credits worth $7,500 for new EVs, $4,000 for used ones. The new law also directs billions at helping people cover health care costs. The Congressional Budget Office estimates insurance premium subsidies extended in this law are going to protect 13 million Americans from increases in their insurance premiums and help 2 million people keep their health insurance who might have lost it otherwise due to rising costs. And the IRS is set to receive $80 billion in additional funding over the next 10 years, allowing it to audit a greater number of high-income earners while also modernizing the agency. According to the Washington Post, that could have the most immediate effect on Americans who might be able to expect faster tax refunds as a result.
Okay, so are you excited right now if you're a new home buyer because you just found out, well, renewable energy just got $370 billion in credits, tax credits, rebate credits. If you're buying solar panels or an EV car, it helps you, but I missed the housing piece of the puzzle. Then the next thing was healthcare. It's going to dramatically reduce healthcare for millions of people out there. Well, if you're on Medicare and you use insulin, it'll help you. If not, it's really not going to help you there. And they're spending $80 billion toward the IRS so they can hire thousands and thousands and thousands of new agents. Where's the inflation cuts and where is this for housing? I must have missed it. But that's the bill. So that's my rant for the day. Let's get over to why you're here. You're here to figure out what's going on with mortgage rates. I get every day. Here's the question I get asked. Dan, is now the time to lock in my rate? So let's go over to discuss this and how this and other economic news is playing a role for today. First piece of this puzzle is we see core retail sales come in. They came in a little bit higher than expected on the core part, but on the retail sales, completely flat. That's actually a good number. It's doing what the Federal Reserve's trying to do is curtail spending, curtail all the prices going up because too many of us are going out there spending. That's driving up the prices, which is AKA inflation. But here's the piece of the puzzle that I don't like is oil. If you watch my channel all the time, I talk about oil. Why? Is because what is the Federal Reserve trying to do? They're trying to curtail inflation. One of the biggest pieces or the biggest components of the inflation front is oil. We can see in the chart today, oil inventory is dramatically low. So what's that going to do at the pump? You're going to start feeling the pain at the pump again. So that's the economic news out today. It's not much, but what role is that playing in mortgage rates today? So we go over to this, my handy dandy chart. This is what we focus in on. This is what I see on a daily basis. It's a little overkill for you guys. So let's go over to a little bit better format so you guys can understand. This is the bond that trades on Wall Street. Okay. Why do I show this? Well, it's bond. The yield on this bond is the biggest component of your mortgage rate. Okay, so this is what's going on right now today. You can see down below, this is what's happening to the price of the bond. As the price goes down, rates go up. You can see over the last 6 months, it's been dramatically down, pushing rates from 3 to all the way to 6%. But look down in here. We hit a bottom about a couple weeks ago. We've come off the bottoms. Our rates are now about 1 full percent lower than where they were. So what's today's rates looking like? Well, we'll go over to that. Here's what today's rates are. These are not my rates. These are not any lender's rates. This is a survey done by Mortgage News Daily, and they post these rates. This scenario is for somebody buying a $500,000 home home with a 740 credit score, putting 20% down. That it would be their primary residency, and it's a single family home. I have to say that for legal purposes, but here's the rates. These are the 6 top products out there. You can see rates basically been stagnant for a little bit. They didn't move much yesterday or the day before. So here's where rates are today. Let me just go over these with you real quick. We have the 30-year fixed rate coming in at 5.29. It's up 4 basis points, 0.04 from the day before. The biggest piece I'd like for you guys to monitor is look at the year to date, or look at the 52-week high and lows. The 52-week low, the rates were at 2.9. Okay, rates are at 5.29 now, but they were just a couple weeks ago at 6.29. So they're dramatically off of the highs. And you can see that all the way across the board here. You can see it. So these are where mortgage rates are. So if you'd like to figure out what mortgage rate you qualify for in your specific scenario, all I need you to do is go to therateupdate.com. You're going to find all our information there. So God bless. Thanks for watching my videos today. If you find value in it, please don't forget to give us a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. Take care, guys. I'll see you tomorrow. Bye-bye.